Hi everyone! Today we are going to be talking about how RESPs or Registered Education Savings Plans work. Welcome to my financial literacy channel, where my aim is to empower, inform, and provide the agency to support Canadians from negatives to millions. You can find out more or connect with me in the links below. So, what is an RESP or a Registered Education Savings Plan? Most important thing to understand is that it is an account that is registered with the government. The best way to think of an account, any account, is like a bucket. So within that bucket, you can put a number of different things. We'll talk about that later. The important part is because it's a registered education plan, the government decides how much can go in that bucket, as well as adds things like grants, and there are some rules as to who owns it and who can take the money out. First thing to know is who the contributors can be or who the subscribers can be. So the subscriber is the person who opens the account. This can be you, and normally is you, the parent. Or sometimes, honestly, I could open one for myself. You can open one for yourself if you intend to use it for education in the future. The benefit for a registered education savings plan is because it's government registered, any of the investment growth that you experience in the account is not taxable until the investments are actually pulled out. Until you withdraw it to spend on school or for any other reason, you're not actually going to pay tax on the growth, which is a huge benefit if you have this invested over the long term. The beneficiary of the account is the person who would be receiving the grants, who would be able to take out the money, and who qualifies for whatever the governments have to give. In a very simple example, the parents open a RESP as the subscribers, and their beneficiary is their child. A beneficiary or your child needs to have a SIN number in order to do this. And actually, technically speaking, the subscriber doesn't even just have to be the parents. It could be grandparents, it could be an aunt and uncle that opens the RESP for the child. However, in order to qualify for any of the government grant, which we'll get into in a minute, you need to make sure that the signature of the primary caregiver or whomever is registered to receive the Canada Child Tax benefit is the person who is signing off on the account and is providing basically the permission for this RESP to receive grant money. As I mentioned, these accounts are basically buckets. So any one child or any one beneficiary can technically have multiple RESPs. You could open an RESP at this bank, at that bank. You could have a group RESP. You could have one at work. It doesn't really matter. You can have as many as you'd want, or the child can have as many as they want. The limits really come down to lifetime contribution and the maximum grants that are applied to the child. Over a lifetime, the maximum to contribute to an RESP is $50,000. There is no specific annual maximum, but most people adhere to maximum sort of annual rules based on the maximum grant that can be received. There are two basically grants that you can expect when you are contributing money into an RESP. The basic one that most people talk about and that most people know about is 20%. So if you're putting in $2,500, that's the maximum for a grant in any given year. If you put in $2,500, the government will add $500. That means, like that, your child now has $3,000 invested for their education in the future. Now, in terms of catch up, because let's say not everybody is able to open an account right away, if it takes a few years for you to get around to opening the account, that's not a problem, or there are a few years where maybe things are tight or you forget and you don't make a contribution. The grants can be caught up on 2 years in a row. So if little Johnny is 6 now and has never opened an account, you can open an account today, contribute 2 years worth for the grants. So that would be $5,000 versus the $2,500 I was just telling you. So the $5,000 would then net another $1,000, $1,000 grant. So little Johnny would have $6,000 in his account without any investment growth immediately, basically. There are additional grants actually available for family incomes or families that earn under a certain level of income. If your household earns under $90,000 per year, there is an additional $50 that can be granted to your child. If your family net income is under $45,000 approximately, this additional grant is actually $100 rather than $50. Now, all of those maximums obviously increase with inflation every year, so make sure that you check in with the government on their website, etc., before you assume you're going to be getting this grant. The education savings grants are only applicable for children. So the first year that any child can qualify for this grant is the year they are born. So if little Jane is born in December 31st of 2022, her parents can actually open an account. It'd probably be a little too late to do it in 22, but they could open an account in 2023 and qualify for grants for her both in 2022 and in 2023. The last year that any child can qualify for the Canada Education Savings Grant is the year that they turn 17. So again, same example, either born January 1st or December 31st. If it's in 2022, if, little Susie turns 17 in March of 2022, that means she has all year, or her parents have all year, to make a contribution to the RESP to catch up on any grants. However, the next year, no dice, there's no more catch up, there's no more grants to receive. So if you're planning for your children and you want to maximize what I love to call free government money, take it, please, then you want to make sure that you're timing it out so that you can receive the full maximum grant before the child turns 17. The full maximum grant, speaking of, is $7,200. So over a lifetime, or over 18 years, 17 years basically, a child can accumulate an additional $7,200 from the government on top of whatever it is you put into your RESPs. So what kind of RESPs or education savings plans are available? Can you open them yourselves? I'm going to differentiate today between group RESPs, personal RESPs, joint RESPs, and family RESPs. So first things first, I'm going to talk about group RESPs. Group RESPs are basically a subscription model, if you will. So you're not opening an account, you're not choosing what the investments are, you're basically subscribing to a larger group plan. So these larger group plans are often sold pretty quick out of the hospital, to be honest. I've seen a lot of those come in, and they're very structured models. You're not the one choosing the investment. Instead, what's happening is you're pooling your money in with the company. So the company is taking your money aside, investing it on your behalf, using funds from a variety of different people in order to say, okay, when your child is this age or qualifies in this way, we will pay out. I have some issues with the group plans because they create a lot of unnecessary barriers, in my opinion, to withdrawals. You have to very specifically qualify. Your child will have to be in a certain number of classes, etc. You might only have access over a few years. The benefit to this on the flip side is that they're incredibly structured. So because of this structure, you know you're not going to be gambling your money on the market. You know you don't have to worry about making poor investment decisions, for example. And you know that at the end of the day, this group plan is going to pay out a certain amount. So a personal RESP is basically one that's opened at any old institution that your name is on with the beneficiary, as I was explaining before, and you're the person who decides what goes in that account. So this is where you can truly think of it as a bucket. You get to decide if this is going to be cash. You can decide if this is going to be mutual funds, ETFs, if you're going to do it through a robo-advisor, for example, if you're going to have your investment broker make decisions on your behalf. It's basically an investment bucket, a registered education savings plan for one of your children. Now, I mentioned family accounts. So your traditional RESP has one beneficiary, one child. But let's say you have 2 or 3 children. So you could have all 3 of those children named as beneficiaries on one family account. So this one bucket, as I said, becomes the singular bucket for all of the children. Now, the reason that this is beneficial is that at the end of the day, money in one RESP can actually be transferred to another RESP for another one of your children within the family without any penalty. You're going to give up the grant that's specific to that child, because the government obviously is only giving that to each child, but any money that you've saved, the tax deferral, all of the rest, it stays within that bucket, and each one of those children can use that money in the event that, let's say, the eldest decides not to go to school and instead gets into real estate investing or traveling the world or something like that. even if you have multiple individual accounts for each child. So Mark and Maddie have two different accounts, and Maddie doesn't go to school, Mark does. Well, her money can be transferred into his account with no penalty, again, because it's all within the family. Joint accounts are just a matter of who is on the account. So this could be both mom and dad on the account, both grandma, grandpa on the account, and it does not get much more complicated than that. The same rules apply for beneficiaries, for grants, for everything else. The withdrawals themselves are, of course, designed for education purposes, but they aren't as strict as solely university expenses. So the thing about a withdrawal is that your child needs to qualify under a CRA qualified educational institution. So these days that could be anything from a technical institute to obviously universities, as I was mentioning, to some of the trade schools. They basically need to be qualified education programs. There are two types of qualification, either part-time or full-time schooling. But either way, what the government needs to see is effectively proof of enrollment. So receipts for tuition paid, as well as course schedules, are effectively what needs to go in to prove that you are making a proper educational assistance payment withdrawal. So of these withdrawals, there are two types of withdrawals. So there is, first of all, the capital repayment. So anything that was contributed by you, the parent, that's coming out is going to come out tax-free, because at the beginning, when you made that contribution, it was a non-taxable event. They made no changes. You already paid tax on it as income. So when you pull the money out for school, it's not going to be taxed. What is going to be taxed is the growth and the grant, but this is not going to be taxed to you. And here's the important part. Your child who is in school now as an 18-year-old, 20-year-old, etc., is probably not making a lot of money. Even if they are 10, 15, 20 grand, their tax bracket is still really low. So anything you're pulling out of the RESPs to support in their education, as I mentioned, is going to become part of their taxable income, but you can usually reduce that with tuition credits, of course. And as we have a graduated tax system in Canada, they're not going to have that much to pay no matter what at the end of the day. If your child chooses not to go to school or does go to some sort of educational program that doesn't qualify under the CRA's regulations, then you should know that there are a few options for the RESP money itself. As I mentioned, it can be transferred to a sibling, but you also have up to 36 years before you need to collapse the RESP. So your child may not go to school right away, but if they go to school in their older years, or maybe you have other access to funds for undergrad and then they decide to go get a PhD or a master's or something like that later on, that money can actually be used in the future and you don't need to drain the whole account right off the hop. If they never go to school and you do eventually need to take the money out, then you have two options. Number one, if you pull the money out, the same sort of taxation applies. You're not going to be taxed on your original contributions. You are going to lose any of the grant money that was paid to the child, and you are going to be taxed on any of the growth because, as I mentioned, the RESP is tax sheltered the whole way through. So this could be a little bit of a taxable impact for you when you're withdrawing, but you had the benefit of tax deferral the whole way through. The other thing is if you have the RRSP contribution room, you can actually roll over what's in the RESP into your own RRSPs to keep them tax sheltered, to avoid paying tax on it and all of that. Again, you would be giving up the grants because the government's obviously not going to let you keep their money for children. Lastly, if you are like one of my clients saving a bunch of money for your grandchildren and you want to make sure that it actually goes to the grandkids and doesn't get dispersed amongst your kids when you pass away and it stays in the RESP, the important thing to remember to do is to name something called a successor subscriber. So as I mentioned before, the person who opens the account is the subscriber. You don't just want to name a beneficiary in your will or a beneficiary on the account, because the beneficiary is the person who receives the money from the account. You want this RESP bucket to stay as a bucket. The way to do that is to basically take this and say, hey, I want that guy, I want Uncle Jim to be managing this bucket on my behalf. So in your will, as I mentioned, the best thing to do is to name a successor subscriber to take over your plans for your children or grandchildren in the education savings. So I hope this video provided you with some good insights. Please don't forget to like, subscribe, or comment for more about your money. If your questions are larger than the contents of this video, please reach out to the certified financial planner in your life for more professional support. Or you can either text me, email me, or set up a 30-minute phone call to point you in the right direction. I am taking on new clients and I am always happy to help. Until next time, wishing you financial security and success.